Everyone's buzzing about what XRP's price would need to hit to be considered for the United States Strategic Reserve. That's right, there's an actual price target for XRP to qualify for this prestigious spot.
I've been trading crypto successfully for over 380 days, consistently closing every month in profit. In the last 90 days alone, my followers have earned over $29,000 in profits by copying my trades. Want to see my verified stats? Click the first link in the profile description and start copying my trades for free today.
In this video, we'll dive into the XRP price chart and explore what it would take for XRP to rise to the occasion. But that's not all. I've got some eye-opening insights about XLM that every holder needs to hear. If you're an XLM investor, you won't want to miss this. Stick around because things are about to get interesting. In today's video, I want to dive into something important about XLM, a topic I've touched on during live streams before and admittedly faced some pushback on. It's not a subject I bring up often, but it's worth discussing. There's no denying there are some fascinating developments happening on the Stellar blockchain. However, when I stack it up against XRP, it's tough to see them as equals. The comparison just doesn't quite hold up for me, and I'll explain why. I've often compared XRP to Google and XLM to Bing. One is poised for mass adoption, dominating the sector, while the other will always have a place. Useful for diversification, but not quite on the same level. Earlier today, the Stellar X account stirred the pot with a sharp comment. Imagine spending more money on lawyers than developers and calling it progress. Ouch. While it was clearly a jab at Ripple, I couldn't help but find it a bit petty. Here's the thing. Ripple's legal battle with the SEC wasn't just about XRP. It was about protecting the entire cryptocurrency space from government overreach. Ripple took the punches so developers could continue building on the XRP ledger and beyond. That's not just progress, it's a stand for innovation. Still, that comment got me thinking. I realized I haven't explored XLM as much as I probably should, so I took a deep dive into Stellar. While my perspective hasn't drastically shifted, I can't deny there's value in understanding both sides of the story. I've always had my eye on XRP. Sure, XLM is out there trying to do similar things, but XRP stands out in so many ways. It's got more adoption, more buzz from institutions, and honestly, a much larger and more active community. For me, that's been reason enough to dive deeper into XRP and not focus much on XLM. Some people argue that XRP is for institutions and XLM is for retail. But let's break that down. Look at the number of wallets on each chain. Look at how many people are holding XRP compared to XLM. Check out the retail projects on the XRP ledger versus XLM's ecosystem. It's not even close. XRP doesn't just dominate institutions, it's also made huge strides in the retail space. Then there's the content. Scroll through platforms like X, and you'll see a flood of activity from the XRP community. XRP is outperforming XLM in key retail metrics, and this isn't about creating FUD for XLM. Far from it. It's about challenging the narrative that one chain is for institutions while the other is strictly retail. The reality? Retail seems to be saying loud and clear, we don't just want to build for retail, we want to play in the big leagues too. They're aiming for access to major liquidity, significant development, and the spaces where real money moves. I've always been a bit skeptical of certain ideas in the crypto space, and recently I came across something about XLM that really caught my attention, and not in a good way. Take a look at this. The top 10 holders control 58% of the entire XLM supply. Alarming, right? But let's dig deeper. Sure, you could argue that Ripple holds a large chunk of XRP too. So, what's the big deal? Well, here's the kicker. XLM burned their entire escrow supply in an attempt to address this issue. Yet, the concentration problem still looms large. Even after burning half their supply, they're left with a significant imbalance. But it gets even more interesting or concerning depending on how you look at it. When you zoom out to the top 200 holders, they control nearly 99% of the entire XLM supply. Let that sink in. 200 entities hold almost all of it. Who are these people? If we assume 35 to 40% of these wallets belong to the Stellar Foundation or those closely tied to it, that leaves a pretty small pool of other holders. So, who exactly is holding XLM? And how decentralized can it really be? For the sake of transparency, I don't hold any XLM. I did have a small amount once, but that was more out of curiosity than anything. Looking at the stats though, it's hard not to raise an eyebrow. People are quick to criticize XRP, yet XLM seems to have its own set of pretty significant issues. While some claim there's no real development happening on XRP, the reality is that hardly anyone's holding XLM, and the ecosystem around it feels like a ghost town compared to the buzz and projects building on XRP. Let's talk about something that's always stuck with me: Stellar's decision to burn their entire escrow. It's a bold move, but one that I can't help but question. Here's why. When XRP was created, the majority of tokens, about 80%, were locked in an escrow account. This wasn't just some arbitrary move. It was a strategic play. That escrow became Ripple's war chest, a critical resource to grow the XRP ledger's ecosystem. Ripple used it to onboard new users, acquire companies like Medico, and even take on the SEC in their legal battles. Every move was calculated to strengthen the network and expand its influence. Now, compare that to Stellar. Instead of leveraging their escrow to fuel growth, they decided to burn it all. Poof, value gone. Imagine if Ripple had done the same. No funds to fight the SEC, no acquisitions, no strategic investments to build the ecosystem. Would the XRP ledger even be what it is today? At first, I wasn't sure about this. I mean, it felt off to me. Something didn't sit right. The idea didn't seem like the best play. But then, you start noticing other things, like how only 200 people hold a significant amount of XLM. That really got me thinking. I usually keep quiet about stuff like this because I know the XLM community is super passionate, and not everyone sees things the same way. But I can't help but wonder, are we overlooking a bigger issue here? Maybe the stats are wrong. Maybe I'm missing an obvious piece of the puzzle. What really gets me though is the XLM team going after XRP holders on X. If I were running that account, I'd take a different approach. Build bridges, not walls. I'd focus on creating products that bring value to the XRP community, not picking fights. We aim to connect communities, foster inclusion, and collaboratively build a thriving ecosystem for the next generation of internet finance. It's about creating partnerships, forging alliances, and interlinking protocols, bringing XRP and XLM holders together to unlock greater value. By working hand in hand, we can shape a more interconnected, cooperative future. But let's shift gears for a moment to talk about XRP's potential as a strategic reserve asset, a topic not everyone is familiar with. For XRP to qualify as a strategic reserve, its total market value must hit between $250 billion and $300 billion, depending on the requirements of individual states or federal governments. What's fascinating is that XRP, when factoring in its entire circulating supply, including escrow tokens and all wallet holdings, already has the framework to meet this benchmark. At just $5 per XRP, the token could reach the reserve requirement, making it eligible for this significant role in the financial system. The argument that XRP can't be included in a strategic reserve due to the network's value doesn't really hold water. Let's break it down. By conventional market cap standards, it would only take a $5 XRP to meet the criteria. But here's where it gets strange. Most market cap calculations only consider about 50% of the tokens in circulation. Why? Because platforms like CoinMarketCap exclude Ripple's holdings and anything in an escrow. That approach doesn't add up. All XRP has been issued and, at some point, has circulated. Ignoring a significant portion of it feels like cherry picking. Even if you exclude Ripple's XRP from the equation and calculate without it, you'd still only need XRP to hit $5 to qualify as a reserve asset. This makes it highly likely that XRP will achieve that status without any issues. Right now, XRP is in a promising position. It's hit a solid long-term bottom and found strong support. The next step, watching XRP climb back to the center of its range and with some momentum, break out of its current channel. It's just a matter of time to see how quickly this unfolds, but the setup looks exciting for XRP's future. We've seen a massive market crash recently, but here's the good news. Support is holding strong, and recovery is looking solid. This is definitely a positive sign for things ahead. Now, let's talk about the big question. Could XRP become a strategic reserve asset? Even if it qualifies, would there actually be demand for it? Here's what has me feeling truly optimistic. This new administration isn't locked into Bitcoin maximalism. They're not just focusing on one token, they're creating space for all digital assets to thrive. In fact, Matt Gaetz recently posted on X saying that tokenization could reshape the entire US economy. Imagine a future where cash takes a back seat and tokenization leads the charge. What he's really trying to say is this: we're on the verge of a financial revolution. Whether that's good or bad is up for debate, but one thing is clear: this will transform the financial system as we know it. The people exploring tokenization, cryptocurrency networks, and their integration into the next-gen financial ecosystem aren't fixated on Bitcoin. They see the bigger picture, the protocols driving it all. This is exactly what Ripple has championed from the start. Ripple has always focused on innovation, building networks with institutional impact, and leveraging the power of connectivity. And guess what? The politicians in power today are catching on. They're not Bitcoin purists or maximalists. They don't see Bitcoin as the ultimate reserve. These assets are seen as incredibly valuable because the protocols they're built on are expected to develop powerful network effects, driving even greater adoption in the future. Right now, we're witnessing a pivotal moment where leaders of the US financial system are planning for a multi-protocol reality, one that could rely heavily on technologies like the XRP ledger. Pair that with the fact that reaching a 5 XRP value could position it as a strategic reserve asset, and the future starts to look very exciting. For Bitcoin maximalists, this might come as an unexpected twist, especially as the US government begins to embrace solutions like XRP on a national scale. If you had told me in 2024 that I'd be saying these things in 2025, I would have laughed and said, no way, not a chance. But here we are, things are moving faster than I ever imagined. The pace of change is incredible, and we're standing on the edge of mass adoption. The proof is all around us. Thanks so much for tuning in. I hope you enjoyed this update as much as I enjoyed sharing it.